You do not want to miss this episode. We're going to dig into the 20 reasons why Canadians need life insurance. How much does it cost? What kind should I buy? What are the reasons? Let's dig into it. Hi, everyone. Welcome to the podcast. I'm Darren Mitchell, and joining me as always, Christina Wyatt. Christina, how you doing today?
I'm doing great, Darren. How are you doing today?
I'm doing awesome.
That's good. I'm excited for this topic today to talk about life insurance. I know we talk about it a lot on here, obviously, but digging into kind of the reasons why you absolutely need or you should be looking at life insurance if you haven't already. Before we jump in, though, I do want to remind everybody, if you're listening on your favorite podcast platform, please make sure you subscribe and leave that 5-star review. And if you're listening or watching on YouTube, please make sure you like, subscribe, and hit that bell button so you always know when new content is coming out. And don't forget to follow us on social media at Control and Compound on Instagram and TikTok.
All right. Thanks, Christina. So let's dig into this. Like, I find Canadians, people in general, they're like, it's one of those things they know they probably need or have, but no one wants to talk about life insurance. No one wants to think about their mortality. And as a whole, Canadians are grossly underinsured as a result of that. Like, I think the latest stats are about 52% of Canadians have no life insurance. And of the roughly half that have life insurance, a lot of them have group insurance, like just through their work, maybe one time salary or two times salary, which, definitely isn't enough if you have dependents. And you lose that group insurance if you were to lose your job or to retire. Canadians are grossly underinsured. And, we talk about life insurance as a want, not as a need. What do you mean? What do we mean by that, Christina?
Well, we say that you need life insurance. We need life insurance, but life insurance pays out, the traditional way of getting life insurance, term insurance, those types of things. It's not really for you, right? It's for your dependents. It's for your family when you die. So do you need it? Not so much, right? It's more so that you want it so that your family is taken care of if something happens to you, or, in our infinite banking side of things, you want it for all of the amazing benefits that it provides to you. So it is more like a want than a need when we look at it. So I want to, we're going to dig into it, but I think that there's reasons that you need it for sure, but there's a lot of reasons why you want it as well.
Yeah, and I mean we're kind of talking more death benefit in this episode for the first part anyway, as opposed to the whole life. Like, yeah, for whole life you buy it for yourself because you get all the benefits. But if we're just talking like term insurance or pure death benefit, it's there's no value in you typically on a term insurance. It's looking after your family if something were to happen. But I always marvel how people, you know if they have a $1 million house, how much do they insure the house for? $1 million. If they have a $50,000 car, they insure the car for 50,000. And if they're going to earn $3 million over the next 20 years, that $3 million comes into the family. How much do they insure? It's like, well, if my spouse has $500,000, they'll be fine. And it's like you don't insure your life, but you insure your assets like your car and your house. And I think the largest asset you have is your earning potential, and your earning potential really is the greatest contribution you're gonna make to your family. So, you know, or like, can you imagine if your house burned down and you only had insurance for 150,000 on $1 million house, and it's like, oh, my husband or wife, they can just get a mini home. They don't need a full replacement value of the home. Well, that's exactly what people do in life insurance. It's like, well, I got 100,000 at work, that's enough. And really it's typically not enough, especially if you have dependents. And we've both delivered big checks, Christina. And it's, I'll be honest, as a person in the life insurance business, it's a little nerve wracking delivering this big check, but there's so much value because you're showing up at a time of just despair for a family, and you're coming with a big tax free check. It doesn't bring the person back, but it allows the family to continue on the lifestyle they have, and it takes that concern off the table. I remember years ago when I was with an insurance company, there was a study we looked at, and it was how kids react after the death of a parent. And kids are hardwired to be selfish, right? Now, obviously, the kids are going to be devastated with the loss of a parent, but this study said kids that can maintain their lifestyle, play the same sports, live in the same house, live in the same neighborhood with the same friends, those are the ones that do so much better relative to the kids who lose a parent and are really challenged economically after that. So, it's really important for the kids' mental health and just social well-being that, they don't have to change their lifestyle. Kids are hardwired to be selfish.
Yeah, absolutely. That makes perfect sense, and why you'd want to do it. I think one of the why you'd want to have life insurance in place for your family members. I think one of the roadblocks that a lot of people hit when they talk about life insurance is the price point. So you hear about it a lot. Life insurance is expensive. It's very expensive. Why would I spend my money on that? It's a big price. Now it is actually it's inevitable. So like with the permanent insurance, it will pay out. So like you're you can get those, it will pay out down the road. But it's really not that expensive to make sure that those things are covered for your family. So two sides of this, if we're looking at term insurance, where people are getting this put in place for, when they have younger kids and they want to protect their income and things like that. It's not that expensive. Like you can get a 40-year-old male can get $1 million for, $40 a month. That's not crazy, to make sure that your family has what they need if something happens to you, right? So, if you're a female, it's even less. For, a 30-year-old, it's a term 10. Like it's not expensive when you think of it in relativity to what it's going to provide for your family if something happens to you. So you hear that from an expense side of things. And then the other side is it's expensive and I have the money. I can self-insure, right? I've got the cash there, which we work with a lot of individuals that are like that, where it's like, yeah, why would I pay for that? I've got the cash there to do it. But why would you not want it to be more efficient for your family and tax efficient for your family as well? If you can make sure that more goes to your family than CRA, then is that an expense or is that a savings? So when you think of it that way, it's almost two sides of the coin. One, you want to make sure that your family's protected. What kind of, for $40 a month, I think that is, a fair amount to make sure that your kids get to have that same lifestyle. And on the other side, isn't an expense if you save money at the end of the day anyways. I wouldn't call that expense. I'd call it more of an investment or a savings plan, right? So you've got two sides of it that way when it comes to price point, I guess. And then, another question that people, that we've asked, and if you think about it, if something happened to you tomorrow, Darren, like, would you want your family to be better off? Would you want them to live the same lifestyle, or would you want it to be worse for them, right? That they don't get to have all those things that they used to have. And when you sit down and you put that into perspective, it's like, well, most people are going to answer the question. How would you answer that, Darren?
Well, at least the same or better off. Yeah. Because
Yeah.
if, all these dreams and hopes you have for your family in the next X amount of years, if something tragically happened to you, would you still want your family to have all those things and be able to go on those trips and pay the bills and live a comfortable lifestyle if you weren't there? And, I want my family to be better off, or at least the same if something happened to me.
Absolutely. And I think that the answer to that question is why a lot of people will have that term insurance, I think, to make sure that their family is protected in the younger years. And then later when we get into, that whole life insurance, and permanent insurance, now you're thinking tax strategy, how can I make it better, without compromising either, right? So I think we should dig into a couple of the reasons why you would need or want life insurance, and we'll kind of look at it from both angles.
Sure. So let's start with the first one. Take care of your family, or we call this income protection, right? So replacing your income. So the kind of rules of thumb in the insurance industry is you can never be overinsured. If you have $1 million house, you can't insure that for 2 million. Well, the same thing kind of applies to your life. You can't. There's people say I have too much insurance. They will not sell you too much insurance. The insurance companies will not do that. If you're making $20,000 a year and you're a 40-year-old man and you want to buy $5 million of insurance, the insurance company's not going to approve you for that, because they basically look at how much income are you going to make over your working life is sort of the starting point. Now, if you're a real estate investor, a business owner, there's all kinds of variations to that. But the simple form is, if you're in your 30s, they're looking at the insurance companies are saying, this person's going to work for roughly the next 30 years. So if they're making 100,000, we'll insure them for 30 times their income, or $3 million, because that's the contribution they're going to make. If you're 40 years old, maybe 20 times your income, 20-year work career left. And if you're 50, 10 years of life insurance. And, you can throw in debts and final expenses and tuition for your kids and all kinds of stuff on top of that. But that's kind of, income protection. And the second one, the costs are really, really low on that term insurance compared to the benefit, right? So a bunch of people pay a small amount and a few people die in that 10 or 20-year term, and they get a major payout, right? So what you put into what the people get back when they die is significant, even on the term insurance, if you're one of those people that were to die. The number three we've got here is ensuring that insurability, right? So people put off buying insurance, and we hear it all the time. People call and say, listen, I had a heart attack last year, or I diagnosed with diabetes, or something comes along, and then all of a sudden, once they think they can't get it, or they're not going to get it at the what we call standard rates, then everybody wants it, right? As soon as you can't get something, everybody wants it. So to get that insurance in place now, even if you plan to do a whole life at some point, getting that term insurance in place to guarantee your insurability, that you can convert it down the road, or even if it's term, you can renew it down the road. Not plan A, but if you're not insurable, you can renew that. So ensuring that insurability is big. And then the fourth one, I'd just say tax efficiency. Like, all this money, all the death benefits in Canada are tax free. So if you get $1 million death claim paid, that's going to be tax free money to your family. Even if you paid that premium with inside your business for your term insurance, that money is going to flow to the corporation tax free, and all or most of it will flow out to your dependents tax free. So it's very efficient that way. And then if you do have the whole life, well, we always talk about the growth is tax free, the loans are tax free, and the death benefit is tax free. So very tax efficient. Given the high tax rates in Canada, this is an amazing tax efficient strategy to deliver a bag of money when your family needs it the most.
Yeah, absolutely. So those are great points. I've got some more here on the list too, though. So if we look at five, now we're kind of getting more into the whole life policies that we use for infinite banking, the high cash value policies. But as well, it can kind of fit to the other two. But if you want to sleep at night, right, this is another reason you might want or need life insurance. It is, well, one, if you're taking care of your family, you're going to feel pretty good about that, having that death benefit in place. But two, when we look at those high cash value life insurance policies, they've got those built-in guarantees, right? They're guaranteed to always go up. They're guaranteed, those cash values are guaranteed to never go backwards, and they have that 150-year track record of paying dividends. So the volatility, and when we look at volatility in these, they're not up and down, right? They're very smooth, conservative, standard deviations very low in these. So it's a nice, it's a nice place to be, to lay your head at night and not have to worry about the stock market, what's going to happen to your cash and your savings. So I think that sleeping at night would be a good reason you might want to look at life insurance. Another one on here that I think is really great is it provides a systematic savings plan or an automatic savings plan for people, right? So a lot of people these days are either saving in investments or they're not saving at all. And when we set up these policies, it's a savings plan, right? The high cash value policies, we're putting a set amount in monthly, a set amount in annually, and that's going to be your savings, where you're saving. If you don't have something set up to pay yourself first, typically you're not going to do it, right? So if you wait till the end of the month to put away that savings, it's not going to be there for you. When we set up these types of plans, it puts that savings into action, which is great. So it's a systematic savings plan. Another one is planning for opportunities and emergencies. So having cash on hand is so important. We talk about that control all the time. We want to make sure we have control over our money. We stick our money into the stock market, into other investments. We don't really have that same control if an opportunity were to come up, in real estate, but your funds are all down in the market, you're not going to be able to access it. If you have an emergency, well, you're not going to be able to access it. You don't want to sell in a down market, those types of things. So having control of your money is super important. And having that, I also think the systematic savings plan is really important with younger people too. You see it a lot where they might start these investing plans and then they have an opportunity, they have an emergency, they pull that money out for the short term, and then that long-term plan's been thrown off the tracks, right? They don't have that anymore because they need to dip in for that emergency. So when you plan for both and you plan to make sure that you're saving, but you plan to make sure you have money for opportunities and the emergencies, it's going to set yourself up really, really great long term. You're going to have yourself set up for both. So I think that one's important. And then number 8 I have on here is you want your money working for you, right? You don't want your money just sitting in a savings account. We know that inflation will eat that up very quickly. You want to have your money doing multiple jobs. We talk about that a lot. You can dig into it, but having your cash inside of a high cash value life insurance policy, that's one. Like we've got that done. It's working for you immediately. It's growing. It's providing that death benefit. And now we're able to, take it and use it for those other things as well. So that would be a pretty, like for me, that's a need. I know we call it a want, but it's a need for me to have these things in place, because if you want to be wealthy long term, you need to think about these things, and you need to pick the right products that are going to be able to do that for you.
Yeah, like I love those ones, like the forced savings kind of idea. I talked to a business owner yesterday, and they were depositing $50,000 a year in the policy, and they're in year 3 or 4 now, and all of a sudden they're like, holy cow, I've got all this cash there, and it's growing, and now I can take advantage of opportunities. But they're like, if I hadn't have done this, I probably wouldn't have saved that money. And for me as a business owner, I love that knowing I fund these policies, I can always access the money. So there's no fear of putting that money away versus an RSP. You put it away, it's kind of in prison. There's no fear of putting money into a policy because you can always access the loans. So if we get into the corporate kind of couple of reasons from a corporate standpoint, we got these business owners that want to save for retirement inside their business, right? Tax efficient money. You pay your small business tax 11, 12%. You get those 88-cent dollars left. You want to invest those. Well, an incredible way to put those or where to put those savings is inside an insurance policy, right? You grow that policy, use it for the corporation, use it for opportunities, but you can also use that for a tax-free retirement. So it's an incredible way for business owners to save for retirement. And so many corporations, business owners we find have cash just sitting there doing nothing, because they don't want to put it into something volatile because they may need the money, and business goes up and down. So instead of sitting on cash, you can put it in here, keep pace with inflation, grow it, create that and asset you talked about, which is huge. And then number 11, this passive income problem in the corporation, and that just got worse with the new capital gains inclusion. If you make more than $50,000 a year of passive income in your corporation, say for instance in your holding company, you are gonna start seeing a reduction in your small business $500,000 small business deduction. You're going to start paying much higher tax rates at an earlier time if you earn more than 50,000. Any money inside an insurance policy is not going to affect that. That money's tax free. There's no tax slip, so we can solve that passive investment. And now with the capital gains inclusion, it's going to get even lower, a lower bar before you hit that 50,000. So that's huge. And then again, at retirement, we talk about borrowing the cash, but there's all kinds of other strategies that a death benefit can be used for, right? Like we can use the death benefit to say, if you'd have a couple $1 million of death benefit, maybe I can take a line of credit on my house, or maybe I can refinance my income properties, or maybe I can spend the proceeds from a sale of a business, knowing if I die with a lot left, that my family's going to be protected because of this huge death benefit. So it's like a permission slip. So all kinds of ways to spend it tax free in death, even on those corporate owned policies.
Yeah, I do think now more than ever, corporate business owners might have a need for life insurance. Not even just a want anymore. It could absolutely be a need with the passive income and those changes to capital gains taxes. So definitely big ones on the list. Another one I have here, number 13, is you don't want the government involved in your retirement planning. So a lot of people out there don't want to use government run programs like RRSPs and tax-free savings accounts for many reasons. I'm not about to get political in this, but a lot of people don't want to. They don't want the government deciding how much of their retirement they're going to have, or retirement income they're going to have, because they put their money into RRSPs and now tax rates are up and they're going to be paying much more. So they like to look for alternatives that are not going to do that. You know exactly what you're getting into. Like we say, it's guaranteed. We know it's happening inside these policies, so we're not worried about them. Would be another reason you want to take a look at life insurance, right? It's not a government run program or product. It's been around since before Canada was Canada, so we don't have those same rules and implications. Another one on here for business owners that I think is important, and this goes for term insurance or whole life life insurance too, is making sure that you have a business continuation plan in place. So business owners will have buy sell agreements put in place, and then some for, with business partners, if something happens to them, the business partner is going to pay out the other. But if you don't have life insurance to fund that, it can be very hard to come up with the cash to be able to buy out that other business partner. So life insurance is a need in that case, I think, to make sure that you have those funds on hand for a buyout. Another one like that is, sorry, Darren, did you want to
Yeah, no,
jump
I was
in?
just gonna say like that I'd love that one of the buy sell because we've got lots of clients that have been on both sides of that. We've had clients where their partner died, business partner died. There was life insurance in place. The life insurance proceeds bought out their surviving spouse, and that person ended up owning 100% of the business and went on to grow it to great new lengths. And we've also had situations, where clients died without life insurance, and all of a sudden the spouse who's not involved in the business is now 50% owner. And I've got clients that have for 20 years have been paying you know their partner's wife. In one case, it was soon to be ex-wife, but paying them for 20 years because they had no buy sell in place to say if something happens to one of the partners, um, what happens. And you can use cheap term insurance to cover that. So I think that's mandatory for business owners. If you get a partner, you need a buy sell to say what happens at death.
Yeah, I absolutely agree. You need the buy sell agreement, but you also need the insurance to fund it, because it's great to have an agreement, but if you don't have the cash to fulfill it, it's not going to work out the way you want it to anyway. So if you have a buy sell agreement in place, you don't have insurance, you need that absolutely to be able to be able to kind of follow through on it. Another one like that would be key person insurance for business owners, and you are a key person in your business, right? If something happens to you, that business is not going to run as smoothly the next day, obviously. And what happens is a lot of businesses fail, right? They have to quick sell because they can't keep running. They don't have the main person that brought in the clients or did this and did that. And if you don't have cash in place, it can, people panic and they're like, well, we're going to lose the business anyways. We're going to sell it for half of what it should be. Or maybe we didn't even want to sell it in the first place. And now we have to sell it because we don't have that cash to keep it afloat. Well, we go find a new manager to come in and take care of it and those types of things. So I think that key person insurance is also need for a business, because you want to make sure that you have that continuation plan in place for your staff, for your family, for everybody to be able to keep going in the business if something were to happen to you. You don't want everything kind of on that. So that would be another one. You also don't want to leave your family with estate taxes. So that just got worse with those capital gains changes for a lot of people. And I know that they said that it's only going to impact 1%. That's just not true. Anybody that has family cottages that are going to get passed down on the death of the second spouse. So you get a rollover on your first spouse, but on the death of the second spouse, all of your assets are deemed disposed of. And we've talked about that a lot from an estate planning perspective, but that's when those estate taxes get paid. And it can be very likely that that's going to be over 250,000 in capital gains. If you've got RSPs, you've got shares in companies, things like that, there's going to be a tax burden. It's almost absolute. And why would you not want that taken care of by a life insurance policy instead of a family member, right? And then what if there's not enough cash there to cover it? Well, now you're selling assets that you did not want sold, like family cottages that have been in the family for generations. And now we don't have the cash there to be able to pay that tax bill, and we're putting it on the market. So if you want to make sure that your taxes are taken care of, your final tax bill, which is going to be your biggest, is taken care of, life insurance is going to be able to do that for you. So that one's a big one. And the last one I have here, well, number 16 I have here is you want intergenerational wealth. So if you want to make sure that your wealth gets passed down to the next generation, well, one, tax efficiently, we bypass probate, 100% tax free. We want that. But if you want to leave a legacy that goes farther than you, life insurance is a really great way to do this, right? We can insure our children, so that takes care of our children and then has a death benefit for our grandchildren. We can insure our grandchildren. We can set up structures so that it happens automatically, that cash is available through the death benefit from the grandparent to go to the parent, to go to the child. Like, it can be a cascading setup where every generation has been funded through the previous death benefit to set set up their policy in place, which is pretty neat because now we're looking out a very long period of time. We're not just helping the next generation, we're helping generations ahead of us be able to be set up for success, right? To be able to have that wealth that you've created that you want to pass down. So I think that's a pretty neat way to use life insurance to make sure that you hit all the way down to the great grandchildren, right?
Yeah, that's what the a lot of wealthy business owners have done. Like the Rockefellers are the famous one. What would the Rockefellers do? That's why they're still very wealthy today, years after that they made their money, because they have this life insurance cascading down through the generations. Another one we see fairly often is estate equalization. And that's really when you have a business owner or a farmer. Farmer's an easy one. You have a farmer. The son started working on the farm since he was 10, and the son works on the farm for 30, 40 years, and then mom and dad die and they leave the farm, half to the son who's been there for 40 years working it, and half to another child who lives in Toronto and married a lawyer and is a school teacher, has no active involvement in the farm. Well, are you going to leave the farm 50-50, or are you going to leave a greater percent to the child that's actually been actively working on it for 40 years and helping you grow it? And life insurance can solve all the problems. A lot of problems get solved with a bag of cash. So the child that's not involved in the business, if there was a corporate owned policy in the farm or the business that was going to pay millions of dollars and say, okay, you're going to get X amount of money in lieu of interest in the business or the farm. It's a nice way to equalize the estate that way. And then, we talked about we have a lot of real estate investors, but keeping those assets in the family, right? Like I own real estate. I'm a real estate investor. I don't want my family to have to sell those properties if they're cash flowing good properties at the time. There's going to be taxes at death. We can take care of those so the families don't have to sell that real estate portfolio or your business. And then, charitable giving, we talk about leaving a legacy. Well, we have clients that want to leave money to charity, right? So create a charitable trust. You can leave money to charity. You can do that in life. Sometimes you can donate a policy while you're living, or you can donate it at death. So some really powerful tax-free ways to fund a charity. And then, for me, I'm not a big fan of paying a lot of taxes to CRA, and you really need to decide. For number 20, we say if you're going to leave a legacy, if you're going to have a beneficiary to your estate, do you want the biggest beneficiary to be CRA, or do you want your family to be the biggest beneficiary, or your charities? And I will exclude CRA every chance I get if I can leave tax-free money to my family instead of more money to the CRA. Then I'm going to do that. And life insurance is a wonderful tool to help you do that.
Yeah, I like that you said that it's a tool. I was just thinking that in my head while we were kind of talking through. Life insurance is a tool that you think you might not need, but you probably do. Like I'd say one of these hits every single Canadian out. One of these points that we talked about will hit home with every single Canadian out there that wants to protect their family, that wants more for their family than CRA, all those things. And if you want to be able to do that, the tool that you need is life insurance. And that's what makes it that need, right?
Yeah, great point, Christine. I think it's a great tool. And then the other missing piece is dealing with somebody that knows what they're talking about, right? Like we get a lot of financial advisors that do 100 different things, right? They'll do your group and your pension, they'll do your disability, they'll do your long-term care, they'll do your mutual funds, and oh yeah, and I'll do some life insurance for you too. Deal with someone that knows to make sure you're buying the right type, the right kind. Like even on a term insurance, the ability to convert it to a whole life, well, you got to make sure you're with a company that has a whole life. So there's a lot of moving parts. Even if you're simply buying term insurance, you should be dealing with advisors that specialize in life insurance, like Control and Compound, or someone else that does that. So, all right, so we've got roughly 20 reasons why you need life insurance in roughly 20 minutes. Anything else, Christina, before we wrap up?
Nope, I think we're good. I think we covered it.
All right, there's 20 reasons why you need life insurance. Thanks for watching. Thanks for listening. Have an awesome day. Thanks for watching this episode of Control and Compound. Don't forget to subscribe and hit that bell button so you never miss a new episode. And if you're ready to learn more, head to our website, controlandcompound.com. The link's below.